Good morning, it's Monday the 20th of March. This is the Phoenix Blue Update brought to you this morning by Tom Colley. Last week we had a huge week for news. Central banks all over the place, obviously dominated by the FOMC rate decision. We got the rise we anticipated. The markets weren't impressed, and since then the dollar has sold off quite strongly. Why was that the case? Well, we saw the rate rise we anticipated. We didn't see the dot plot, which projects how each member sees the rate rises going forward through the remainder of the year. Particularly, we didn't see that, more hawkish than anticipated. They're still only anticipating two further rises this year, which are cautiously predicted to be September and December. Also, one member voted to hold rates as they were, which was effectively even more dovish. The net result is the markets were disappointed. We saw the dollar sell off. So the question is, where do we go this week? What do we expect from the dollar this week? Okay, over to the news first. First thing to mention today is a Japanese bank holiday. Expect some lack of liquidity, certainly in that marketplace. This evening we have the monetary policy meetings from the Reserve Bank of Australia out 12:30. Well, that's 12:30 tomorrow morning, UK time. Other than that, that's it for today in terms of the news. What is interesting going forward for the week, and I've highlighted here, is we have all these speeches by FOMC members in the week following the rate decision. I think it's fair to assume that we'll see these speakers talking up the hawkishness, the upcoming rate rises, etc., etc. But they're clearly points in time through the week to keep an eye on, to find out what's being said. We will be looking for comments there to be the main driver of the dollar this week, ahead of very little news. The only other really significant news this week is the rate decision from the Reserve Bank of New Zealand on Wednesday. Interestingly, one of the speakers here is Kashkari. He was the member who voted to hold rates as opposed to raising the rates by the 0.25%, which actually happened last week. He seems to be a little bit, from what I've seen, a little bit different from most of the other members, so it'll be interesting to see what he's got to say in conjunction with all these speakers, none of whom are by their nature hawkish. So hawkish comments from any of these speakers are going to be more significant than they would be if they were coming for somebody who was perceived as a hawk. Obviously in there we've got the Fed Chair Yellen speaking on Thursday. There's also a speech from Trump later or this evening. I'm not so sure that will be so significant. What I'm watching for is the FOMC member speeches and Yellen if she speaks specifically about rates. Okay, over to the charts. The dollar index, we can clearly see we had a big sell-off last week. That's continuing into today. So far we've had a bearish move overnight. So far this morning, at the time this slide was taken, we're at a level at the moment, but the really significant level for me, or there's two levels, call it a zone, whatever you want, is through here, potentially in conjunction with this channel from the April 16 lows through the low of the presidential election night, through there. So that's clearly a very significant level. If we see a break below here, certainly in the medium term we are going to see a bearish dollar. We could potentially be this head and shoulders playing out to the downside. We can see that same formation on the Euro chart as an inverse head and shoulders. But going into today, as I've said, we really are very uncertain about where the dollar is going exactly. We want to hear some of the Fed speakers. We want to see the market reaction, certainly. So here at Phoenix Blue, we'll be out of the market today, looking to see how the markets still react to what happened last week. Over on the yen, significant level for us here, about 111.80. This is the bottom of this box range marked in yellow here. We have seen this market holding this level on two previously occasions quite significantly. Our view on this market is we don't necessarily see further downside in this market, which might also be reflected in the dollar. We'll correlate this level with that zone I showed you on the dollar index. We'll also correlate that with the level of about 108. 30, I think it is, through on this level here. Again, we've got a couple of levels we're watching here. We've got a commitment of traders, extreme short signal here, meaning the markets and the futures markets have reached a point where there's an imbalance between their long and short contracts. That gives us a signal that we've reached a significant level, being a level that is as high as it's been in the last 6 months. We have two levels through here in conjunction with this falling trend line here. At this moment in time, these levels will be looking for price action reversals at those levels for the reasons of uncertainty that I've already mentioned. We've seen a bullish euro really since the ECB rate statement and press conference the week before last. The comments that came out of there were more hawkish than were anticipated. Last week we had ECB member Nowotny say that a rate hike could be needed soon. So their members of the ECB are this one in particular, are potentially looking at the future of rate hikes, the easing of QE, etc., etc., or the reduction in QE levels, etc., etc. Interestingly, that's something that we specifically saw denied by the Bank of Japan last week, in that they said they would hold all their QE and curve control policies in place until inflation reached or exceeded 2%, which is a really, really significant target for them in that market. So aside from the reaction we had to the negative reaction we had to the rate rise in the US last week, we've got on the other side of that, we've got a more bullish euro playing into that uncertainty. Over on the pound, well, for me, we're testing this level through here at the moment and this downward channel. This downward channel is part of a bigger channel which reflects the whole pre-Brexit, post-Brexit scenario. We are at this moment in time, the pound has been playing out bullish against dollar weakness. We do have coming potentially this week or early next week, the British government actually activating Article 50 to start the process of leaving the European Union. I think that mark will potentially bring to a head the any long move in the market here. I think the markets will realise, right, no, this is it. This is really going to happen. This is really going to start happening now. And as we said before, we see this as a very high volatility market. Certainly over the coming months and potentially right through to the UK actually leaving the EU. We've had the potential Scottish independence referendum on the agenda again in the last week or so. So much going on there, so much uncertainties, no precedents to work with. So we will be, as I know I've said before, we'll predominantly be looking at significant levels here and intraday trades in that respect. Over on the Aussie, well, this morning we're already, we've broken through this level through here. We're currently testing, and at the time this slide, we've begun to potentially reject this downward trend line through here. But further levels through here, and we have the potential for this market to break through to the long side. We've had some decent data out of the Aussie over the last week to 10 days. So we can remain bullish in this, but always subject to what actually happens with the dollar, and we'll obviously be correlating it with that dollar index as we showed you earlier. Over on gold, well, we're testing another level through here. Obviously, we're showing dollar weakness. We're expecting strength in gold. We've got another level which is potentially more significant through here. But I see this market being, like basically most of the markets, being very dependent upon what the dollar actually does. We will later in the week be looking at cross pairs to try and factor the dollar out of trading opportunities and bring some other trading opportunities to the table. But where we are at this moment in time, we do want to see some more of the reaction to last week playing out. So again, it's a week for patience. Unfortunately, I'm sure most traders were hoping that we'd get a really hawkish reaction from the FOMC. We'd see that dollar strength that we're looking for, but clearly at this moment in time, although the US economy is doing well, it's not, in the eyes of the FOMC, doing better than they perceived, let's say last time they raised rates in December. Equally, we're seeing a more bullish picture in the euro. We had the Dutch election last week, which went in favour of Europhiles. However, I've already mentioned we had that statement about potential, or the need for a potential rate rise. We've also seen Marine Le Pen doing somewhat better against Macron in the polls in the European election. Okay guys, so day for caution. If you like what you've seen here, in a moment there'll pop up a window where you can subscribe to the channel. There'll also be a link through to the website where you can ask any questions, see about future free trading events. We're just waiting for confirmation of the day of the next one, provisionally the 20th of April, but we'll confirm that to you in the next day or two. Have a great day, and let's hope we'll get some clearer direction to talk to you about in the morning. Thank you and goodbye.